Petersen, welcome to the Capital Raiser Show. I'm super excited to have you on here. You're a public speaker. You're getting on stage at Jake and Gino. I met you at that event just last weekend in Orlando. And it's my understanding, based off of what I hear from you, you've syndicated a variety of deals and have a portfolio of 1,100 units, which is insane. Very good track record. And you're writing a book. You've written a book that's going to be coming out here in the next month or two. It's called Syndicating is a Bitch. So tell the background. First of all, welcome to the show. Tell the audience a little bit about your background so they know who they're talking to or they're listening to.
All right, so we'll start with the obvious, right? You threw the bomb out there, so let's talk about it. Syndicating is a bitch, right? So I showed up at the Jake and Gino conference with my banner, pushing the book, promoting the book, and people are walking by going, "Oh, you're saying syndicating is a bad idea?" Like, no. That's not what it is. It's trying to make sure people understand that syndicating anything, especially an apartment complex, is tough. It's a lot of work. It's a lot of stress, a lot of liability. It's very, very doable. It's very rewarding, very lucrative. I'm just trying to get across in the book that it's more difficult than most people are led to believe. Most people are told that, oh, anybody can do this. This piece of cake. You understand spreadsheets. You're off and running. Go. You'll do it. That's a crock of crap. It's not that easy. About 50% of the people that I've helped do this over the years, they come to me after owning it for a few months to say, I just want to sell it. I don't want to do this anymore. This is hard. So I try to prepare them as they're going down this path that you could do this, but it is a lot of work. And, most people don't listen, don't understand, don't believe me when I say that, oh, I can handle it. It's harder than most people think. So that's really what the book is about. It's a step-by-step guide, but a realistic view as to what it really is. So
if a guy loses their job, right, and then they go to a boot camp, hey, syndicating, it's a good idea, right? Let me pay somebody some money and then let's do this, right? That's typically what the person thinks, but that's just not the reality of things. Is that right?
Oh, no, not even close, right? You'll usually have people on a stage somewhere pitching their program to you. Now, just speaking about Jake and Gino, because we just left there and we've mentioned their names a few times, these guys are not what I'm going to describe in any way, shape, or form. But you have some of these groups that are just pitching their $20,000 to $40,000 program, and they're not going to lie to you at all. They're going to tell you the truth, but they're only going to tell you like the good side of it. Have some people come up on stage to tell you, oh, I joined and yesterday I turned into a trillionaire, It's all rainbows and lollipops. Well, there's a lot of downside to it too, which is totally overcomable, right? You can get through all of it, but a lot of people aren't prepared for the things that will eventually happen to you if you syndicate enough deals. So I'm just trying to be real about it, that, it is a great way to make a living. It's very fulfilling, very lucrative, but understand what it is. It's hard, but that's okay.
What are some of the hiccups and problems that some of the people that you've personally seen have gone through?
Well, it's usually personality based. Almost without exception, it's personality based. I hope this doesn't offend your audience, but you're going to get kicked in the nuts. It's going to happen. You're owning a business. This isn't some panacea, some magical fairy dust kind of thing because it's real estate or because it's multifamily. It's like owning any business. Things are going to come up. Again, keep your head about you, keep pushing, and you'll make it through it. It's fine. Most people that struggle, they just can't handle that emotionally. You possibly are going to get sued, right? You'll have complaints filed against you with the renters association, the tenant council, whatever the thing is called in your area. People are going to file complaints against you, and they're pretty much always going to be groundless or baseless, but they're still going to file them. You got to deal with that. We've had dead guys on our property. Now, I self-manage, so I'm a little different than most people. Most people will third-party manage, so you'll have a buffer somewhat there. But again, we've had people die. We've had arson. We've had hurricanes and tornadoes and fires, and things are just going to happen, and people aren't prepared for it emotionally, even though they think they are.
Man, yeah. It's an exciting business, but yeah. One of the favorite things that I like to talk about with people is war stories, even from our own properties that we have had, so like the roof will come down on people, or the bomb squad and ATF shows up trying to do drug investigations on some of our apartment units. But yeah, this is a crazy business. So tell me about, how did you get started in it? Because were you a single family guy first and then transition into it, or did you just jump right in?
No, I quit working for other people at the age of 43 in 2010, I think it was now. Um, and I just sat at the computer one day. I thought, I don't know what I'm going to do with the rest of my life. At the time, I wasn't married, didn't have a family of any kind. And I thought, well, okay, what's the next thing for me? So I did a Google search for mentor for real estate, a real estate mentor. And, I poked around, talked to a few people, and finally found somebody that I felt was a good fit for me. I paid them, just like we're talking about other people doing. I paid somebody to show me the ropes. I think it's a brilliant idea. A lot of people think, oh, I can't pay a guru. I'll just go out and do it on my own, and I'll learn things on message boards and going to meetups. That's fine. A mentor has done it. They've been through it before. They can speed up the process. You could do it without a mentor. It's going to take you longer usually, and you're probably going to make more mistakes than you would had you had that mentor, right? So I fully believe in mentors. But I found a mentor to show me how to do it. No, I never did a single family deal in my life. I married 5 years ago, coming up on 5 years ago in November. So I married into a duplex, but then I started realizing that duplex took up more of my time than my 120 unit apartment complex that I also owned at the time. So it's like, this is not working for me. So we sold the duplex. But I've never directly done a single family deal in my life. The first deal I did was that 48 unit in North Austin. I syndicated the very first deal I did with the guidance of my mentor. I was shown how to do it. So I had the confidence to go out and do it, having never done it before. Raised money from 14 other people that I met through a meetup that I started. They got to know, like, and trust me over a matter of many months, like 6 to 9 months. We all went in together and bought this property, and 2.5 years later made 300% return. And again, have totally syndicated 1,100 units. To date, we own 940. We've sold a few along the way.
How big do you want to grow it?
Well, once you get to scale, which we have, there's no reason to stop ever, right? Because we've got full corporate staff. We have regional managers, we have bookkeepers and operations managers, and then we have all the properties have their own staffs to run the properties. So at that point, you're juggling plates, you're keeping everybody in line, establishing culture and vision for the company. I do act as the asset manager, but it's not that difficult. Now, I don't want to say it's easy. It's not easy at all. But once you get scale, you're just bolting on additional properties to the system you already have in place. So, why shouldn't I go to 5 or 10,000 units? I think that's definitely doable.
The property management, you say that you self-manage. Do you mean that you created your own management company that now takes care of your entire portfolio? Or tell us more about that.
That's correct. That's exactly what I've done. My first deal, I had no experience, no track record, so the bank didn't trust me to run a property on my own. Now, by running it on my own, I was going to hire a manager and a maintenance guy, but still, they didn't have any faith in me being able to pull that off. So, my first deal, because the bank mandated it, I had a third-party management company. But once I took over, I had about 6 months to kind of get my feet under me to feel confident in what I was doing, and I let them go. And I've managed everything myself since. I formed my own management company back in 2012, and we've managed everything we've ever done. I'm not opposed to third-party managing because a lot of people do. I would guess 80% of this industry, they are third-party managing because most people just don't want to deal with the day-to-day of running the properties. It's tough. There's a lot going on. There's a lot of turnover in this industry from an employee standpoint. So it's not for everybody. Most people want the more simple approach of outsourcing the whole thing. But yeah, I've structured my own and I've managed everything all along the way. And in fact, we just opened a management company in Nashville as well this year. It's our way to try to establish ourselves in the Southeast.
Cool. So explain to me or talk to me a little bit more about your first capital raise. You raised all the money from your meetup. But what was that process like? And how did you raise the money? What did you have to tell them? Why did they believe in you?
Well, again, I started a meetup. We grew from 2 people to now that mailing list is like 400 or 500 people strong. But what happened is we would get together every Wednesday for about 2 years, and then we went to every other Wednesday. At the beginning, it was once a week, just at a local Starbucks and then a local barbecue restaurant. And we would just get together and talk about real estate, about the things that each of us had learned the previous week, because all of us were trying to figure it out. We were all going to different meetups, different real estate investment groups. So we were just comparing notes, bringing back to the group what we had learned the previous month or the previous week, actually. And so we got to know each other on a personal level. We would boat together, barbecue together, we'd go drinking together. So we became really good friends. And that's really what it was, that they knew that they were taking a chance on me as a first time syndicator. I had nothing to point to say that I can do this, but I have a strong resume professionally. I've led people my whole life. I've been in charge of multi-million-dollar P&Ls before. So they got to know and trust me. So we all went in together. I raised $460,000 from 14 people. I put in $115,000 myself. I had investors as small as $10,000. I had a high school math teacher. I had a private investigator. And then, I'm in Austin, right? So I had a ton of tech guys in my group. But now it basically became just a bunch of friends that went in together and bought a property.
Was it as a syndication or a joint venture?
A syndication. It was a syndication fully. I did all the work. They just put money in, and the whole thing, they went to their mailbox quarterly in their underwear to pull a check out. That's all they did.
And then, so walk us through the mental process of doing this first syndication, because you're not a lawyer, right? But you need all of these documents. Was it a very simple thing, or did you have to go out and get educated on the syndication? Because basically, a syndication is like a security, right? You take an LLC and you cut it up into slices and you sell those slices to a group of investors. Was it less complicated than that or more complicated than that?
Well, it was super complicated because, I didn't know what the hell I was doing. So it was nerve-wracking, some anxious times because I'd never done it, but I knew that I had the intelligence to work through it, figure it all out. The mentor told me who to go talk to with respect to the operating agreement. Now, I'll just be honest. My first deal, I did not do a PPM because I was given bad advice, not by the mentor, but by somebody else that I listened to like an idiot. It worked out okay, but I did not do a PPM because in my mind, I was told if you raise less than $1 million, you don't really need one. They're expensive. I'm like, okay, I guess that's the answer. I don't know any different. I've learned since always do a PPM to protect yourself as the syndicator. But so I reached out to a real estate attorney that helped me craft my operating agreement and my subscription agreement. But I'd never done it. So it was nerve wracking. So my attorney, it's the same attorney I use to this day. I've used her for every deal that I've ever done. She's kind of grown with me. And, she kind of explained a lot of the things as we went. This is why you want this clause, and that's what this other clause means. So, she kind of took me by the hand, knowing that I'd never done it before, and she was great.
At what point in your syndication business did you decide to brand yourself as the apartment guy?
Well, that's an interesting story, right? So as a syndicator, I'm a professional money raiser, right? My goofy line is I can make a lot of people a lot of money, but if I can't raise any money, I can't make anybody any money, right? So I'm an operator, right? Have my own management company, my own asset management company. But at the bottom of it all, I raise money for a living. That's what I do. So I was sitting out in front of the barbecue restaurant one night for the meetup, and I had just bought a car about 3 months prior. And I thought, you know what? I don't like this thought. I've always thought it was weird. But let's just see if the vanity plate is available for APT-guy. I was never going to get it. I was bored. I had some time to kill. Well, sure enough, it was available. So I thought, oh, that's interesting. So then let me go do a Google search and see if anything comes up, apt-guy.com. Nothing came up. So it was available. I was like, well, son of a bitch. I think I should really do this. I always looked weird at people that had vanity plates like, come on, douchebag. Okay, well, now I'm one of those douchebags, right? There's a reason for it sometimes. And, it made sense for me. So it was my way of branding myself. a way to stand out. Now, I was at the Jake and Gino multifamily mastery this past weekend, and a guy walked by the table. We were also set up as a sponsor of the event. Somebody walked by and critiqued my logo. Right, it's a caricature of my face.
Yeah.
Oh, that's ridiculous. That's stupid. That's not professional. That's a terrible logo. Have a wonderful day, asshole. Go away. Everybody wants to judge. I'm sorry, I went off on a tangent here, and I apologize. I'll wrap this up quickly. Everybody wants to judge, right? Kiss my ass. It's working for me. I am not trying to raise money from family offices, from institutional investors, insurance funds. That's not who my target audience is. My target audience is, the people that are still going to their day job. They may be in the tech industry. They may be a math teacher. My brand, my caricature resonates. People walk away and it sticks. Like, they may see me at another event later, go, you're the dude with the cool little caricature. So you know what? It works. It's a calling card for me. So yeah, that's what I did. I've even got it on my license plate, like I said. But yeah, that's my personal brand. It's how I'm trying to make a presence in the world, right? Get myself noticed.
Yeah, some people say that real estate syndication is not a real estate business. It's actually a marketing business. So I like to talk about branding. I mean, I'm trying to create my own personal brand separate from my real estate company, which is Bakerson. But you have this concept where you're going to be writing a book. Now, I've been to conferences where they say, hey, write a book. It'll make you the authority figure. And I buy into that. I like it. And I applaud you for writing a book. But now you can use this book to grow and educate, right? Because this is an educational business. You can grow yourself as an authority figure with this book, and then get a bigger and bigger audience so that you can raise more and more money, which is fantastic. I like the concept of raising money. Thus why I created this show, the Capital Raiser Show.
Right. And you're right. There are two different businesses at play. There is the apartment guy, which is the public face of our acquisitions company, which is Bluebonnet Asset Manager, right? So that's the company that we buy all the properties through, that we raise all the money with. But again, I am the public figure, the public face of that company. A lot of people do that. They market themselves to raise the money. To, again, it's not about putting money in my pocket. I'm going to make people a lot of money along the way. But again, I've got to get people to basically, quote unquote, open the door for me. And that's what the apartment guy brand allows.
So tell us more about the book. What kind of chapters do you have in there? What kind of details do you provide?
Well, it's basically a step-by-step guide on exactly how syndications work. It's going to show you, it's going to give you a timeline that you really need to stick to make sure your deal goes well. But it's going to walk you through every step of how to strike up the conversation with a mortgage broker, with a real estate broker. What kind of attorneys do you want on your side? When do you need to engage those attorneys? When do you need to talk to your CPA? How to go about talking to a management company. So it's all the players on your team to do this syndication, what they do for you, when you want them engaged, and sometimes it's even, how much you should expect to pay those people. With some colorful language mixed in a little bit. The title of the book probably should tell you that. So if you don't like curse words, you probably don't want to read my book. It's not gratuitous, but it's just the way I talk, right? It's written the way I talk. But yeah, it's every step of everything you need to know. And again, a timeline of how to get it all done.
Is it targeted to the beginning investor or somebody that's more sophisticated?
Somebody more sophisticated, because I'm not going into the process of this is how you assess a deal. This is how, I'm assuming if you're looking into syndication, you probably already have a working knowledge or a pretty good knowledge of what real estate investing really is all about. So this is kind of the graduate program, if you will, that, once you got this single family program ironed out, right? You've got a little portfolio of single family homes. And you're thinking, this is a lot of damn work. I don't like this. This is too much work, too much hassle. I want to go buy an apartment complex. Well, I can only afford a 6-unit on my own if I syndicate. So see, those people already understand real estate investing. So this is for the people that understand it. And now I'm just going to show them a way to scale their business and exponentially grow their business.
Do you think as you get better at raising capital that you may switch asset classes? Have you looked at storage units, mobile homes, oil and gas, hotels, cannabis farms, anything else?
Well,
Why
yeah,
is multifamily the best one for you?
well, we've got our thing ironed out. We can raise money fairly easily now, as you know, for whatever that means. It's still not easy, but it gets much easier as you go. Yeah, you can syndicate anything. You know, like you said, you can syndicate a cannabis company, Bitcoin stuff. I see people syndicating. My ultimate goal is to syndicate a minor league baseball team. You
Wow.
know, I do apartment complexes now because they're rational and they're probably the safest asset class that I've found. There may be something out there safer, but for me, this is what works. People always have to live somewhere. It's the last bill they're going to give up typically, because if they give up that bill, that means they're living under a bridge, right? So I really prefer this industry, but you know, we're looking at commercial now. We're looking at short-term rental, and again, I firmly want to buy a minor league baseball team. A lot of people are like, oh, you can't do that. What's the same people that said, oh, you can't do that, buy an apartment complex? Well, I just did. You know, I'm sorry you don't think it's possible, but you know, the assets that I'm buying now are 20 to 30 million dollar assets often, and with those properties, a minor league baseball team is going to run me anywhere from 5 to 50 million dollars. Well, that's the space that I'm playing in now. And who wouldn't want to, you know, be able to put in their portfolio, oh, hey, I own a baseball team. So I think syndication would work very, very well to buy the baseball team. You know, 5 to 10 years from now, that's my goal.
Yeah, I'm looking forward to watching you on that path. Maybe going to one of the baseball games of the team this year.
Absolutely.
You buy, that'd be a hell of a lot of fun, and drink some beer there, and eat some hot dogs and whatnot, and do the American dream.
Yep.
So then, when you were creating your team, tell us about. So you got your 14 people on your first deal. Are these people the same guys that you're investing with now, or who's your team? Tell us about that.
Yeah. Well, so now we've got a database of probably getting close to 1,500 people now, prospective investors. That first deal, I'm going to guess 25 to 30% of them are still with us on every deal we've ever done. You know, many of them just, they got one deal done. They're like, hey, that's all I needed. Thank you very much. Or, you know, when the next deal comes up, they just don't have the capital for that deal. But a lot of them have been repeat investors. Um, you know, we have a total investor pool, people that have actually put money in our deals, somewhere between 250 and 300 unique investors. Some of them are in multiple deals. Um, but yeah, I mean, we're always raising money. If you're going to raise money, if you're going to be a syndicator, right? Don't ever stop raising money. That's the idea behind this podcast. Don't ever stop raising money. People think, oh, I'm done. No, you're not done. If you don't want to get another deal ever in your life, okay, fine, you're done. But if you think you want to buy the next deal and the next deal and the next deal, you can never take your foot off the gas. Well, I just closed. Doesn't matter. There's an event tomorrow. Go to it. You always have to be building rapport with people, developing relationships, and networking all the time.
So friends and family, 506B, or public solicitation, 506C. What's the tool of choice for you?
Most of my deals have been 506Bs. I've done one 506C. Most people are doing 506Bs wrong, if not just outright illegally. I got something in my email box, in my inbox today, from somebody that has just grabbed my information from somewhere and he sent me a deal. I know the name. I recognize this person's name from maybe a Facebook group or something. He sent me this deal and I start going through his documents because I have a funny feeling I know what's going on. I don't want to invest in the deal, but he sent it to me. And sure enough, I go to a subscription agreement and it says it's a 506B offering. Dude, you don't know me. I didn't ask to see that. He just broke the law. You know, people are going to burn. People are going to burn in this whole little gold rush of multifamily. I hope they don't, but I know tons of them are out there doing this wrong. And all the syndication attorneys that are out there, the big major national voices, they're all sounding the alarm bells. You guys are all doing this wrong, and you're going to go down for it. It's safer to do a 506C because with a 506C, yes, I can solicit to somebody like me, like that guy did, right? That's totally allowed. You could run an ad in the Wall Street Journal, you know, market it on Facebook, whatever you want to do. All things as long as you're not fraudulent or, dishonest, you could do really whatever you want. And I don't need to know any of the people that invest in my deal. Now, I want to know them even on a 506c, but I don't have to legally know them. So I prefer the 506c, and that's probably the way we're going to start going. We'll keep doing 506bs, because we have friends and family, true friends and family, not people that we become friends with because of real estate. But, the guy that I went to sixth grade with, right, and my kids, some of those people aren't accredited. So we'll continue to do some 506bs along the way, but our way forward for the most part is going to be 506cs.
So the 506c, we're at a stage right now where we're going from 506b to 506c. And there's some new marketing technologies that we have to implement, create some better marketing for our webinars. When you were getting into the webinar aspect, do you do a webinar for your deals?
Yep. Every deal we do a webinar.
How did you get good at doing that? What did you do to create those systems to get that information in front of as many people as possible?
Okay, so this is going to sound arrogant, and I don't mean it to. It's just we're all talented in different things. That's a talent I have. I can speak to people. I can stand in front of the room and talk to 10,000 people. Doesn't bother me. I can riff. It's a natural thing for me. So I didn't have to prepare at all. All I really do is create, I have the offering memorandum that I send out, and I just basically go through that offering memorandum in extreme detail on the webinar. I think it's GoToMeeting that we use. We use that in conjunction with, we use Calendly, we use a CRM. But yeah, basically all I do is walk through the offering memorandum, give more color than this static piece of paper basically can do. And then I go through that for about 30 to 45 minutes. And then I reserve the last half hour for Q&A. Keep everybody muted. Nobody gets to talk at all, because I'll have 100 to 200, 300 people on a call. And if I allow them to talk, it would be complete chaos. So they're muted, but they have the ability to submit questions. And my wife moderates it with me, and she asks me the questions that are coming in. So we take about a half hour to answer as many questions as we can. And then any we can't get to, we follow up with emails to answer everybody's questions. We record the webinar, and then we send that out to our list of interested investors, and because some people can't make it live, so we want to make it available to everybody.
So how is it working with your wife? Do you have other family members involved in your business?
So yeah, working with my wife is fantastic. She's a CPA. She's got a master's degree. I am a college dropout. So we have a totally different mind, brain, and approach. She's more conservative. I'm not reckless by any means. I stress test everything I do. I'm very cautious, conservative with other people's money, but we're just wired differently. So it works very, very well. Now, our daughter used to work for us, and, I fired her. I had to fire my own daughter. Her heart wasn't. She said, "Oh yeah, I want to do this." And so we, brought her into the mix. She was paying bills. She was helping with reconciliation on some of the properties and some of the companies, but she wasn't keeping up with it. And so I finally had to let her go. So I wanted to be a family business, and she'll maybe come back to it at some point in the future. But yeah, right now it's my wife and I run the thing. And I think it's great. Not all husbands and wives or, partners, it doesn't always work. Very often one partner's in, the other partner wants no part of it. And I'm just very lucky that I have a wife that is very into this. Her background is in real estate, taxation and audit. So it's a good fit. It works great for us.
Yeah, I'm recently married and my wife is from Mexico. She knows English pretty well, but real estate is its own language. So she's kind of on the fence, like she wants to help, but she doesn't want to commit 100%. So she's not completely off and not completely on. It makes things challenging. So I always love to ask people, how do you manage that? And I appreciate your answer. What do you think is your internal drive that pushes you through all of these obstacles that you describe in your book? How do you get through that with the perseverance?
Well, the option is death, right? Well, look, you can crawl away and hide in a hole. And sometimes, I'll be honest, I would like to, because what you're going to have to deal with or say or communicate. It's not fun, right? It's not fun to tell you that we had somebody die on the property. Not fun to tell the investors that on one of my properties, fourth year of ownership, taxes went up 26%. I got to do it though. So it's just, what's the alternative? There is no alternative for me. I love business. I like dealing with people. It's stressful sometimes. It's not fun to be the bearer of bad news, but you have to do it. It helps preserve our credibility. And the screensaver on my phone, I don't know if this will come out. Yeah, let me do this. I'll show you this. Sorry, give me just a second.
Yeah, you bet.
See, you read that?
Yeah.
It says
awesome.
never give up. It might be reversed on the camera. I don't know, but it says never give up. So it's all these subtle little reminders. I see that every time I turn my phone on. When things are going bad, you can't give up. If you give up, you're going to keep working at 7-Eleven, the night shift, for the rest of your life. Shit's always going to come up for everybody. You just got to push through it. You will get through it. A guy that I worked with a while back walked into a conference room that I was standing in, and I was preparing for a speech that night. And he walks in, and you could just read misery all over this guy. It looked like, somebody had burned his dog and kicked his house. I was like, what the hell's wrong, Chris? It was, Bruce, man, how do you do it? How do I do what? He said, how are you always on? How are you always upbeat? Chris, it's real simple. It's called perspective. Every day that you physically wake up and you're physically not on fire, it's a good day. You could be dead and you could be on fire. If somebody in your family isn't going to die, if you're not going to die, put it in perspective. You'll get through it no matter what it is, and it's just a mindset. That's all it is. Keep pushing.
And then, so is your plan to create an educational platform where you teach students outside of the book how to syndicate, or is it just going to be the material that you have inside the book?
Well, we're working on some stuff right now. I love what Jake and Gina are doing. I love what Bigger Pockets is doing. There's a bunch of good ones throughout the country. I don't want like this full-blown thing that they're doing. At the end of the day, I'm kind of lazy. I don't want to spend that much energy. We've got a good thing going. We're probably going to work on some online content, maybe a subscription thing that will walk you through all the different aspects. We've got the great advantage that my wife is a CPA with a focus in real estate. So we have that to offer as well. So we'll probably do that. We're thinking about, some weekend seminars. I teach a lot at different meetups throughout the country. I'm going to Nashville in 2 weeks, I believe it is. And I'm going to teach a small group of people how to syndicate. So yeah, it's a huge passion of mine, teaching others. The meetup that we have going ourselves in Austin right now. So we've started a second meetup outside of the first one that I had. And the idea behind this one is we're just going to teach the entire syndication process from the beginning to the end for free. We're not going to charge anybody for anything. We meet the third Tuesday of every month, and not everybody will be able to make it to every single one of those events. So there will be gaps in their knowledge. So what we will do is also do some seminars that if you can devote a 1 or a 2 day weekend to us, we'll walk you through the entire process with guest speakers, some of the experts in the field. So that's our approach right now. But for the most part, the book and doing a lot of free educating through our meetup.
Tell us about the near horizon. You got any deals under contract or stuff coming up in the pipeline?
We have a 256 unit that we signed the contract on today. Earnest money hit the title company. So we're selling that. I'm hoping it'll close by the end of the year. We're going to try to 1031 those funds into another deal. And like I said, we opened up another management company in Nashville. So we're going to start looking at properties throughout the Southeast. So yeah, hopefully we will be, we'll continue buying. It's getting harder to find deals that actually pencil and that work, but we're still out there looking.
Do you think that you're overpaying for properties, or that people have to overpay in this economic climate?
So I don't know if that's a loaded question, because there's only one way to answer that. Well, of course I'm not overpaid. If I was overpaid, I wouldn't buy it, right? So, but I have something that a lot of people don't have. And I'll just be frank about it, that I'm really good at what I do. And I know that's arrogant as hell, and it's going to turn a lot of people off, but it's true. We know how to operate these things better than most that we buy them from, because we see the people that we bought them from. We see how they were managed, how they were run. We look at their P&Ls before we buy it. So we know there's all kinds of missing revenue streams that they haven't thought about. They're paying way too much for different expenses that they don't know they can reduce. And this is coming from 200 and 300 unit properties that are institutionally owned. They're not the best operators. So we don't overpay that. So we're buying with a margin of safety. We're going to come in, tighten up the ship. We are going to implement new revenue streams, and we will generate value that way. So no, in my opinion, we're not overpaying for anything right now. But to not overpay, it's looking at more and more deals than we used to have to look at to find the right deal.
Yeah, I had a gentleman come on the show who is a big time syndicator and said that he was overpaying for properties, but it didn't matter because he preferred to do that than sitting on the sidelines. And he said that I'm actually talking about Neil Bhalla. So I have the highest respect for him, and he was a lot of fun to have on the show. And he was talking about, even though he pays a little bit extra because of his marketing system and his management and his ability to increase the NOI and decrease the expenses, that he was still able to overpay for these properties and create a significant return in the 17-18% range for his investors. So it wasn't a loaded question. I just wanted to see how you would respond to the same question.
Okay, so then, what I differ with the way he characterized that. Then I know Neil. We're not tight friends, but we're in a mastermind together. To me, that's not overpaying. Like you said, that he is one of the smartest men I have ever had the pleasure of talking to. That dude has got more shit in his brain than I'll ever have. But because he is so good at it on the front end, statically in a vacuum, yeah, okay, you're probably overpaying. Maybe you're paying a lower cap rate than the industry, than the market average, but he knows his systems are so good at the end of it, it won't have been an overpay. So I understand what he's saying, but I don't consider that overpaying. And yeah, that's a brilliant dude right there.
Yeah, he was a lot of fun to have on the show. So you going to be speaking at any events upcoming?
Well, we've got the one in Nashville. Now it's a smaller deal that we're doing. We're also going to speak at a meetup there. The year is winding down. Most of the big ones have already happened. So I don't have anything scheduled right now other than a few meetups and a few different classes that we're going to be teaching across the country. But no big conferences as of right now.
Let the audience know, what are some of the best ways to get a hold of you? What's your preferred method of contact?
So the easiest way to get a hold of me is look me up on Instagram, Apartment Guy. I always forget how these, I think it's at Apartment Guy, APTGY. I'm going to read something if you don't mind, because I'll never remember the numbers here. So we've got the book that's coming out in a matter of months. So if anybody's interested in a free copy of the book, just text book release to 415-528-7403. We'll send you a free copy of it. Again, I'm not trying to make money on this book. I'm just trying to help people understand what this thing's all about, because a lot of people are going to get into this, not know what it's all about, and wish they had never gotten into this. So I'm just trying to help people out, but I'll give you a free book if you'll do that.
Would you say that your book is designed to get more people to enter the syndication space, or to prevent people from coming into that space?
Oh, no. I want everybody to syndicate. I just know that most people shouldn't syndicate, right? I think of the people that I've helped along the way over the years, 70 to 80% of them it's probably that high. They should not have ever done this. And I try to tell them, look, I'll show you how to do it. I don't think you're cut out for this, because it's hard and it's stressful. And I don't know that you've got the mental fortitude, the intestinal fortitude to do this. But yeah, again, I'm trying to help people understand what it is they're really going to be getting themselves into. I want everybody to syndicate. It's fantastic. I love it. If I teach other people how to do it, they're not competing with me. I have a huge abundance mentality outlook on life. If I help you syndicate like I'm syndicating, it doesn't take from me. There's a ton of stuff out there to go around. So I really, truly want to help people syndicate. But I know that with the approach I'm taking, I'm going to hopefully save people from making a mistake, that I should not be doing this, that, oh, this is great. Oh, crap. I don't know if I want to do this now. So if I convince a few people that shouldn't be doing this to not do this, I consider myself successful with the book.
Very cool, man. Well, I've really appreciated having you on the show. You've been a pleasure. hopefully we'll connect soon. I'd love to take you out for a beer or maybe some barbecue. I know you mentioned that word a few times. I love barbecue myself.
I'm a carnivore dude, and I like bourbon.
Yeah, man. I'd be happy to join in on that party with you anytime, man.
Yeah, absolutely.
All right, cool, man. Thanks for coming on the show. And I'll get out your information out. I'll make sure and post it on top so that people know exactly where to text that information.
Hey, real quick, one thing I forgot to do, I got wrapped up in the book, right? But also the website. That's the best way to follow what's really going on from a calendar standpoint, things like that. So it's apt-guide.com. So,
Awesome.
man, thanks for having me on, though.
Yeah, you bet, man. It was a pleasure meeting you and glad to have you on the show.